History doesn't repeat itself, but sometimes it rhymes, loudly. Today, two major hedge funds just collapsed. And the scary part, this looks almost identical to what happened before the 2008 crash. Right before Bear Stearns fell. Right before Lehman Brothers triggered global panic. Investors are calling it the Big Short Moment, Part 2. Most people will ignore this warning. But you clicked this video, and that means you want to know the truth before the rest of the world wakes up. Phase 1. Subprime is back, in a new form. Back in 2008, the crisis began with subprime mortgages, loans that people could not pay back. In 2025, it's happening again, but not with houses. This time it's subprime corporate loans, over-leveraged hedge funds, derivative positions 50 to 100 times bigger than their cash reserves, and highly risky bets on interest rate moves. Two hedge funds just lost everything because they were betting on markets staying stable. But markets flipped suddenly, and their leverage exploded. Phase 2. Liquidity panic, the first sign of a crisis. When big funds collapse, the first thing that disappears is liquidity. The market gets scared, investors stop buying. Banks tighten instantly. This exact same pattern happened in 1998. Crash 2008. Crash 2020 crash. And now, 2025 is showing the same symptoms. The panic doesn't start with the public. It starts with the people managing billions. Phase 3. Smart money is quietly moving out. Do you know what the richest investors are doing right now? They're pulling money out of risky assets. Silently, they're moving into cash reserves, gold bonds, defensive stocks, and international markets. Not because the crash is here, but because they feel something coming. Smart money always moves first. Retail investors always move last. Phase 4. Debt levels are becoming dangerous. The biggest risk today isn't broken hedge funds. It's the massive wall of debt behind the entire system. Household debt, highest in history. Corporate debt, highest in history. Government debt, never been higher when leverage stacks on leverage. A single collapse can trigger a domino effect. That's why these hedge fund failures matter. They are not the problem. They are the warning. Phase 5. Your opportunity inside the chaos. Every crisis in history has the same pattern. The unprepared suffer. The informed get richer. In 2008, while the world panicked, smart investors made millions. You don't need to be a millionaire to benefit. You just need to understand the shift early. And that's exactly what you're doing right now by watching this. This isn't fear. This is awareness. A big shift has started. You can either ignore it or prepare for it. You made it to the end, and that means you are not like the rest. You want knowledge. You want growth. You want control over your financial future. So, brother, if this breakdown helped you understand the truth, I ask for just one thing. Subscribe. Because your support tell me your work matters, keep going. And trust me, I will.